Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Saturday, February 12th, 2022. It is the weekend. We just had a pretty volatile week. The market had a couple big down days on Thursday and Friday. I hope you are all staying safe. I hope you are all position sizing correctly. I hope you are adhering to your stops, because the word that I would use for this market lately has been volatile, and another word would be vicious. So I hope you're all doing okay. Please follow your rules. Please follow your process. Understand that we're in a down move here recently, but just when you think you'll never make another penny, you'll make another penny. And then sometimes when you are doing really well, you think that you are never going to have another loss again. We all kind of feel that way sometimes. We feel kind of bulletproof and things are going well. And the market always hands us a loss just to remind us who is in charge. So thank you for coming today. I hope you are enjoying these weekend podcasts where I go over the trades that I had during the previous week, why I entered them, or when I entered them, why I entered them, how I am going to manage them moving forward. We'll also do a little bit on trader psychology today. We will also go down through my watch list today and look for some good potential setups for next week. So that's the plan. And before we get started, I need to run the U.S. legal disclaimer, so I will be back in 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, thanks for holding on with me. So, okay, again, this is the plan for today. First of all, we're going to go through my current positions, talk about when I bought them, why I bought them, how I've been managing the trade last week. And we're going to do that both on all the trades I took on the daily bars. We'll do that on the weekly bars, the trades that I took on the weekly bars, and also the trades that I took on the monthly bars. After that, like I said, we're going to talk a little bit about trader psychology, such an important part, such an important skill. Really, the most important skill in trading is the ability to create a plan, follow your plan regardless of your emotions. Then we're going to do a little with a trading poem from my good friend Frank. Then we are going to head over to my watch list. We're going to go down through the watch list, each stock one by one, take a look at some potential levels that I will be looking for next week. All right, so let's get started. Okay, here we go. First of all, IBB. So I did buy IBB back here on the 4th of February, and the entry signal was as follows. It was a higher low V1 in the value zone. The first requirement for a higher low V1 is we have to close below the -1 ATR channel. This is the green line here. Clearly we were below that. Then what we need to do is we need to rally into the value zone, which is exactly what happened. Then we need a pullback to ideally double test the -1 ATR channel as support below us now, and then the entry trigger was a V1. A V1 consists of two bars. Here is bar 1, here is bar 2. Bar 1, you need to look at what the low of bar 1 is. Bar 2 goes below, washes out, or goes below bar 1 by at least a quarter ATR. An ATR is from this distance to this distance, so I need a little bit about a quarter ATR, just about right. Then it closed above day 1's close. So V1 has two bars involved, day 1 and day 2. Day 2 has to go below day 1's low, and then it has to close above day 1's close. MACD also green here, which is another good sign. So I bought here at 130.88. That was my trigger. You see two lines here. One down here, this is my emergency stop. My emergency stop is always going to be the value of 2 ATRs below my entry price. Another one up here, this is my trailing stop level. Once I get up to this level, then I go into trailing stop mode. All right, so close below the value zone, into the value zone, pull back, retest the negative 1 ATR channel, and then the entry trigger was the V1. My end of day stop is the a close below halfway of the washout bar that entered the trigger. That is what this line is here at 130. Now, my end of day stop is going to be if we close below that. You can see on Friday we got very, very close. 130 is my line in the sand. It's 130.07, so I did keep the position. So, am I down on this position? Well, I entered here from here to here, so technically down 0.65 on this trade. However, a big part of my trading is phasing out of a position when a partial of my position as it goes my way. So yes, I bought here at 130.88. Now, if it moves up the value of 0.45 ATRs, today's value is 0.45 is 1.79. So whenever it moves the value of 1.79 points on this particular chart right now, I always get out of 10% of my position. So I bought this 130.88. The next day it moved up, and I did take a 10% position off at a profitable level. The next day it went sideways. You can see it came back here, tested the halfway of this bar, and then on the 9th we had a big up move, and I was able to take advantage of that. I hit 2 profit targets. So in trading, for me, I always have my emergency stop, which is down here, 2 ATRs below my entry price. I have my end of day stop, which normally about 95% of the time when I get out for a loss, it's a close below my end of day stop. But so that's defensive, right? You always need to have those stops, and I always use 2 stops. But on the upside, I always take partial profits on the upside as well at profitable levels, so that if I do have a turnaround with the stock coming back down, I don't have to regret that I had all this profit here and didn't take advantage of any of it. And I did. So return to value, pullback, retest, V1. I got out of 10% of my position here, about 132.61. I got out of another 20% of my position here on the strength. And that's the offensive part of trading. So your stops are your defensive. Me selling into strength when I have a profitable position is the offensive part. So I did take off 30% of this trade already at profitable levels, and the remaining 70%, yes, I'm down a little bit because I got in at 130.88 and we're at 130.07. So still probably profitable trade because I took 30% off here when it was nicely up and slightly down. So the long and short of this is next week, if IBB closes below 130, that will be my signal to get out. So far, this trade had some profitable, I got out at some profitable levels, but the bulk of the position that I have is slightly underwater, about 0.75%. So again, next week, if we close below 130, then I will just go ahead, exit the position, do what I'm supposed to do. If it keeps moving up, well, of course, I'll take profits again. Just as an example, right now we are at 130.07. Come Monday, what I will do is I will take the closing price of 130.07 and I will add to it the value of the 1.45 ATR, and that's 1.79. So I'll take 130.07 plus 1.79. So my first profit target for Monday, if we continue up, will be 131.86. I'll take that. I'll add the 0.45 ATR to it again, 1.79. and that will put me at 133.65. That will be my second profit target, and then I will add that the 0.45 value again, 1.79. I'm not going to do this on all the positions, but just to give you an idea. So for Monday, these are my three profit targets that I just wrote down. So I will put here the first profit target at 131.86. That will be the first profit target. Second profit target will be 133.65. And the third profit target will be 135.44. And there we go. And so Monday, if it reaches 131.86, I'll take off 10% of whatever my position is. Let's just say I have 1,000 shares of this particular stock right now. After, I would have had to have bought more here, right? Maybe 1,200 and then, or 1,300, and then I scaled out, and maybe it leaves me with 1,000 shares right now. So I always take 10% of whatever my current share position is. That's going to be 10% of that is going to be my first profit target. 10% is going to be my second. 10% is going to be my third. So for Monday, my first profit target for 10% is 131.86, 133.65, and 135.44. And it's really nice if it does gap up or move up and you hit a couple profit targets and then it pulls back down. That's why I do this. It's like a regret minimization. Always want to sell into strength, at least a part of my position. So those are the three profit targets for Monday. My end of day stop for Monday is 130. It's 130.07, so it's barely hanging on, but as long as it's holding my end of day stop, I'm going to stay bullish on this position. So that is IBB. CarMax. All right, here we go. I did buy CarMax back here on the 8th of February. We had a V1 to the downside here, and then the next day reversed right back up. This is a little unorthodox. We also have a double bottom bullish divergence with the MACD, retest of the -1 ATR channel. So I bought here at 108.67. Next day we had a huge move up. Then, as we know, Thursday and Friday we had a big pullback. So I got in at 108.67. It's 108.48. So it's slightly down on the trade, but about 0.2% on the trade. But again, positive on the trade actually because of the profit targets that I take every day the next day if it goes up. Well, you can see I bought this on the 8th. On the 9th, we had a huge move up. I hit 2 profit targets. So what does that mean? It means that I had 100% of my position, took off 20% of my position at very profitable levels, right? And now we are back. So I am up on this trade. The whole remaining, or the majority of the account, or the majority of the position, I am slightly down. But because of the profit taking that I take, the partial profit taking that I take, actually up on the trade. Where would be my end of day stop? Well, of course, we have emergency stop as always down here, 2 ATRs below my entry. End of day stop here is a close below halfway of this washout bar. And so if it closes below 105.20, I will go ahead and exit for a loss. And again, I won't do it on this particular chart, but I will have 3 profit targets for KMX on Monday. I'll take 108.48, add the value of the 0.45 to it, which is 217. That will give me my first profit target. Do it again, second, do it again, third. All right, Tesla. All right, so I bought Tesla back here, all the way back here on the 28th of January. This was a great confluence of setups, really great. We rejected the 200-day moving average. We rejected the 250-day moving average. We rejected the -3rd ATR channel, and we have a V1. Here is day 1, here is day 2. 2 washes out 1, and then closes above day 1's close. Just a huge amount of confluences and combination of indicators, and that's why I bought it. So I bought it here 834.46. Again, I have to have my emergency stop, which is 2 ATRs below my entry. That's down here, 706.25. I have that in place. And then why did I take the trade? Well, I took the trade because of the rejection of the 200-day moving average. So my end of day stop is going to be a close below the 200. Well, you can see we had a big down day on Friday, but we are still currently above the 200-day moving average, and so I will keep it. And again, as always with all of my trades, as soon as I enter, I put my 3 profit targets for the next day. So you can see we entered back here at 834.46. Next day, we had a huge move up, and we got to trailing stop level as well. And as soon as I get to trailing stop level, then if I have a close below the previous day's low, I'm going to exit half. So we entered 834.46. We had a huge up day, got to trailing stop level, took off, I think, 3 profit targets here. So I took 3 forms, 30%, because I hit 3 profit targets. I took 30% of the trade right off at very, very profitable levels. So that's the offensive part. So now that once we get to the 1.5 ATR trailing stop level, my rules tell me as soon as I have a close below the previous day's low to get out. Well, I never did until Thursday. And Thursday, you can see we closed below the previous day's low. I got out of half of my position at 907. It's 860. So that rule was really good because I took half off, and it allowed me to sidestep the big down move that happened on Friday. I still have a part of the position, right? So I'm not thrilled that it went down on Friday, but looking back, I'm really glad I took a nice big half of the position off at 907. So my end of day stop on the remaining shares is a close below the 200-day moving average. It is still holding. So technically this particular, I guess I put this here for a reason. So on Thursday, I took half the position at 907 for a 7.76% gain on that half position. I also phased out with my partial profits on the big up moves, and then the remaining shares, if I have a close below the previous day's low, I will get out. I'm sorry, if I have a close below the 200-day moving average, then I will fully be out of the position. Currently, right now, the remaining shares that I have on this particular trade up 3.06%. But again, because of the trailing stop rules that I have in place, half of this was taken at, this is just approximate, but half the position was taken at a 7.84% gain. So again, close below the 200-day moving average, I will be out, and then I'll place my 3 profit targets on Monday in case we have a big up day. So that is Tesla. And then TLT, this was a new trade that I took on Thursday, and this was a scary trade to take. A lot of these deep dip buys are usually scary trades to take, but I'll explain why I bought this here. First of all, we went under 30, over 30. Of course, those of you that know my deep dip buy strategy know that is one of my signals, but I like to have confluences and combination of signals lining up. So just an under 30, over 30, just by itself, so far for me was not enough, but there is a double bottom with the bullish divergence here, which I really like. Now, what's a double bottom with the bullish divergence? Well, first you have to have a low with deep red MACD bars. You can see this MACD bars momentum indicator. The further down these bars go, the more selling momentum there is. Learn this from studying with Dr. Alexander Elder. So we move down, deep red MACD bars. Second requirement is then we have to have a rally that turns MACD positive back to green, which happened. So we have a low, deep red MACD bars. We rally back into green, which we did, and now we have to come lower than the first low. Well, here on the day that I took this, clearly we are lower than the price over here. And then MACD, you see how MACD is red, but it's not as red and deep as it was over here. That means that the downside momentum is waning and we are essentially running out of sellers. If this move down was as strong as this move, then these deep red MACD bars would over here would have been deeper than here, and we would have a convergence, but we do not have a convergence. We have a divergence, meaning that the second move down was running out of selling pressure as indicated by these MACD bars here, which are not as deep as over here. So that's bullish. So when I have a double bottom with a bullish divergence, I get excited, but I need to wait for the trigger. Well, what was the trigger? Well, the trigger was simply the under 30 over 30 on Thursday. So I bought at 136.25. It's currently 138.25. It's up 1.48% so far in the trade. Really nice trade there. Have my emergency stop down here, 132.67. Orange line up here, what's that? That's my trailing stop level. So if it reaches my trailing stop level, I will go into trailing stop mode, which means I will sell half of my position if in the future we get a close below the previous day's low. So really nice trade so far. Started out negative, had a big reversal bar up. So glad to have had a nice positive trade on Friday when everything was down so much. Okay, here we go. Here's the cues. Another trade. I took this trade back here on 128.22. What were the signals? The signals were a combination of signals. Under 30, over 30. Had a V1. Here's day one, day two. Day two washes out V1 and closes above day one's close. We had a rejection of the negative third ATR channel. I bought this here at 350.53. Next day moved up nicely. You know what I do when it moves up nicely. I always take partial profits off. This next day off, I took off 2%. My orange line here is my trailing stop level. 1, 2, 3 days later, we got to trailing stop level. So I did go into trailing stop mode. Then after reaching trailing stop mode, we had a close below the previous day's low. So I take half. So I took half of my position off at a profit at 350.370. Whenever I take an under 30 over 30 and it moves to my 1.5 HAR trailing stop level like it did, then if the price ever gets back to my break even point, I get out. And so that's what happened. Under 30 over 30, moved up, took profits along the way, reached trailing stop level, then had a close below the previous day's low, sold half at a profit at 353.70. Then we moved sideways. Remember, here's my entry point. Had we gotten down there, I would have gotten out of the rest of the position because it moved 1.5 ATR trailing stops, but it never did. Sideways. Then we had another big up day, which again, hit a profit target, took some more off. The next day, or the previous day, we closed above the 200. Next day, we closed below. I didn't like that. I felt like that was a red flag. So I took another half of a half or a quarter of the position off at 358.50. And then on Friday, we came down and it did get below my entry price, but I did sell at my entry price because those are the rules. So essentially, I took half of the position was about a 0.93% gain. 1/4 of the position was about a 2.24% gain. And then the balance of the last quarter of the position that I had, I got out at break even. So pretty wild ride here, but I think this is a good example of why I like to take partial profits on the way up. An offensive approach. I had two defensive stop approaches. So you have to play offense, you have to play defense. You can see if I would have just bought this trade here and just held it, I would be underwater, but I'm not underwater because of the offense and the defense that I play because of the close below the previous day's low. The rejection of the 200, I didn't like that. And I think, these small little nuances of trading, of getting out on strength when things are going your way, also getting out when things are going against, that's what caused this trade to be a nice profitable trade. But if I would have just held on to it, it would have been a loser. So I am now out of the Q trade. Microsoft, boy, we had a lot of trades. Okay, another example of rule-based profit taking, stop loss taking, turning it just a buy and hold position. I bought this because of the bounce of the 200-day moving average. It closed below the 200-day moving average on Friday. So had I bought this and not done anything with it and managed it, it would have been a negative trade, but it was not. So we bounced at the 200, bought here at 295.71, moved up, took profits the next day, hit some profit targets next day, hit some profit targets, nothing the next day. Here, more profit targets. We got here to our trailing stop level at 311.40, right? Because that's 1.5 ATRs from my entry. So I bought it because of the bounce, phased out along the way, got here to 1.5 ATR trailing stop level, which means if I have a close below the previous day's low, I will get out of half. And that's exactly what happened here on the 3rd, right? Enter, got to trailing stop level, have a close below the previous day's low. So on the first half, bought here, got out here for approximately a 2.13% gain. So very happy for that on half of the position. Move sideways, had another big up move here a few days ago, took some more on profit taking. And then Friday we closed below the 200-day moving average, which is my end of day stop. So if I just had bought and held this, it would have shown a negative 0.27% return on this trade, which is small, but because of the trailing stop levels selling into strength, this was a very profitable trade. So one more time, bounce at the 200-day moving average, set my trailing stop level. As it moves up each day, take partial profits off, which I did. Here, got the trailing stop level, then have a close below the previous day's low, sold half, locked in profits on half, moved sideways, had another up move, took some percentage of the position off because of the big up move, which clearly I'm glad I did. And then here on Friday, we closed at 295, which is slightly below. So I am out of Microsoft, but nice profitable trade because of the offense and defensive rules. IBM. All right, here we go. I took IBM back here on the 1st of February with a higher low close above the 200-day moving average. Place my emergency stop down here as always, 2 ATRs. What's my end of day stop? End of day stop, so close below the 200. I want my end of day stop to be very close to my entry to give me the very best risk, risk to reward. So bought here at 133.90. It did initially move up nicely. And what do? I do take profits every day, partial profits. So I took some here, took some there. That was about it. Then we started to move sideways. This is my 1.5 ATR trailing stop level above here at 138.60. Never quite got there, so I don't go into trailing stop mode. And then IBM did close on Friday below my entry price. So on the remaining position, I got in at 133.90, out at 132.70 for a 0.87% loss, which is pretty good considering this market. That's the main thing I want to point out here, that it's fine to have losses. You just have to keep them small. That's the key to profitable trading, is keeping your losses small. And so we had a close below the 200-day moving average. So yeah, got out for a slight 0.87% loss, but it really was not, because I took off profits here when it was at profitable levels, so it mitigates the move down. All right, so that is IBM. All right, now let's go to some weekly trades. As you know, I like to trade as many different time frames as possible. I trade all day long on the 5-minute. I take end of day trades, end of day swing trades on the daily bars. At the end of each week, I look for weekly trades on the weekly bars. At the end of each month, I take trades at the end of each month based upon the monthly bar. So I like to have a lot of variety of different time frames. Maybe one time frame is working for you, maybe the other ones are not. But I rarely see all time frames not working for myself, and that's why I take them. So on the weekly, here we go. I took this on the week of 128.22. We had an under 30, over 30. We had a rejection of the negative third ATR channel. 92% of prices tend to stop going down or hold here at the negative third. That's why it's important. So under 30, over 30, rejection of the negative third ATR channel, rejection of the 100-day moving average as well. And so I entered this at 193.20. We are currently at 201.23. So currently the on this trade up 3.89% on, or 88% on this trade, which is pretty good for a couple weeks. But you know, earlier in the podcast I was showing you the 3 profit targets. Well, here I set 3 profit targets on IWM for this week, and here's one at 203.27, one at 209, and one at 213.05. The lines that are dotted means that those profit targets hit. So this is a good example, and this is why I left this up for the podcast. So entered at 193.20. This week I took 10% off at 203.27 and 208.16. So I took well, the first week after I bought, I also hit a profit target. So I took 10% off there and then took another 10 and 10 off here. So this is a good example of why I like to phase out, because I mean, I got some here at 208.16 when now it's only 201.28. So the bulk of the position from entry to exit here up 3.88% on the weekly trade. My end of day stop will be a close below the 30 RSI, because that's why I took the trade in under 30, over 30. Now, I did reach trailing stop level on this trade. See, we got here to the orange line. This is an under 30, over 30 trade. So when that happens, if I were to ever come back to my entry point, I would get out of the trade at break even, but it wouldn't be break even because I've hit profit targets along the way. So I'll just have a stop in the system at 193.20. If we move down next week and it gets there, I'll just sell the remaining at break even, but have the comfort of that it was a profitable trade, again, because of the profit targets. Profit targets, especially in a volatile market like this, always make me feel a lot better if I hit those and then the trade turns around. So weekly on IWM up nicely so far. Facebook, okay, not so hot tamale on Facebook. This was a big hit percentage wise, but not dollar wise. This is probably a good time to get into this. But you know, whenever I'm entering a new trade, I always take my maximum allowed dollar loss. Usually 1% of your total capital is a good rule of thumb. So if you have $100,000, 1% of that is $1,000. So you take $1,000, divide it by the value of the 2 ATR. That will show you how many shares to buy. So no matter how bad things get, you're always, I shouldn't say always, because you could have a huge big gap down, but the majority of the time your maximum allowed loss is going to be the maximum you can lose. And it doesn't matter if you're trading the daily or the weekly or the monthly. Using the 2 ATR position size calculates and factors in the volatility. So yes, this particular trade, well, let me go over the particulars first. So I bought this at the end of the week last week. Why? We had this big down move after earnings. We went under the 200, over the 200. That was my entry signal. So I bought here at 237.69. If I had a close below the 200 week moving average, I would get out. My emergency stops down here, 2 ATRs below my entry price. So, you know, let's just say I was getting into this trade here. My maximum allowed loss would be $1,000 if and only if it hit my 2 ATR, right? Because, to go back to that, you know, if I was trading this, I would take whatever my maximum allowed loss is, 1% of total capital. Let's just say it's $100,000. Times 1% is $1,000. I divide it by the value of the 2 ATR, 51.24. And that would tell me to buy 19.5 or 20 shares, right? But I'm only going to lose that $1,000 if it hits my maximum allowed loss. Here, I did get out with a 8.39% loss, which was not fun, but as far as dollar wise, not that much, because if it had got down here, I would have been $1,000 loss. So clearly this closed below the 200-day moving average here. The loss is not quite that. So I am out here. It didn't hold. Next week has some potentials again for Facebook, but we'll go down through that as when we start looking at trades. You can see I placed my 3 profit targets for this week here at 248.66, 260.23, and 271.71, but none of the profit targets got hit. There was no strength, but you can see clearly here that we did close below the 200-day moving average. We are at the 250-day moving average, although we close below it. Next week, if we close above the 250, I will take this trade again. And let me show you actually while we're here. This is from etfreplay.com, and you know, when I take trades, I like to have the comfort that certain levels have held in the past. And so I use this from etfreplay.com, and I'm using this by permission. And this is my back tester. So what I'm doing here, I'm back testing Facebook 250-day moving average on the week, because that's a weekly bar. And so if we run this, you can see oh, it's only had one trade on the week, but it is positive, right? It is a positive trade with the under 250 over 250. It's been a long time since Facebook's been to the 250. So next week, if we can close back above the 250-day moving average, I will take the trade again. You know, that I think I see a lot of beginning traders make the same mistake. They take one position based upon a good entry rule, which, and this was a good entry rule, right? But if it loses, then they're like, I don't want to, and then the entry trigger re-triggers, they don't want to get back in. I know, you know, it's like insult to injury, but a lot of times that second or the third entry point that you take, or entry trigger that you take after the previous ones that failed, is the one that moves. So I am quite excited about buying Facebook next week. And you might say, well, Greg, why didn't you, if you're excited, why did you get out and take the 8.39% loss? Well, because I'm supposed to. I said if it closes below the 200, I will get out, and that's what I did. So next week, if we close above the 250, I can take the 250 trade. If we close back above the 250 or the 200, I can take that one as well. So this was a big loss here. 8.39%, but as far as capital, not too bad, because remember, hypothetically, you know, in this trade here, loss of $1,000 maximum in the worst case scenario, and that's if we got down here, and we didn't even get close. So it was about a quarter of that. Okay. And then lastly, love on the monthly. Again, I like to trade as many different time frames as possible. I did buy Love, which is Southwest Airlines, at the end of January, the last day of January. Why did I take it? Well, we have a V2. Here is bar 1, bar 2, bar 3. Bar 2 washes out bar 1 or goes below bar 1 by a quarter ATR. Bar 3 closes above bar 1's close. That's a V2. Consists of 3 bars. Bar 1, 2, 3. 2 goes below 1's low. 3 closes above 1's close. Bought this here, 44.74 on the monthly. Now I'm position sizing on the monthly, so the 2 ATR is going to be very, very big. So just one more time, let's just say we were buying this today for whatever reason. Well, if you have a $100,000 account, 1% of that's $1,000. Take $1,000, boom, 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 divided by the value of 2 ATR, 1565. That would tell me to buy 63.89 shares, or rounding up to 64 shares. Now, it's not a lot of shares, but the reason it's telling you not to buy a lot of shares is because you can get a lot of move in a month. If this were on the daily, this number would, the 2 ATR number would be would be much smaller than this, and so it would tell you to buy more shares. So when I talk about position sizing based upon volatility and your time frame, this is exactly what I am talking about. So you can see I had my 3 profit targets for this month here at 48.43, 52.10, 55.75. In case it had moved up, if it had, I would have sold 10% of my position there, 10 there, 10 there. That's the offensive part. My end of day stop is, since this is a V2, day 1, 2, 3, 2 washes out 1, 3 is above 1's close. Halfway of this washout bar at $42. So this month we did go slightly below and slightly above. So currently on this particular trade, doesn't look like it's up much, but it is up 1.63% so far on this trade, and I'm glad to have that, especially in such a red market. But down here is my emergency stop, end of day stops, halfway of this washout bar, entry because of the V2. Orange line up here, 1.5 ATR trailing stop level. If I get there, I'll go into trailing stop level, and then here were the 3 profit targets, but none of those have been hit yet. So those are the positions. Last couple days have been really down, took a lot of the profit away, but it's fine that my trailing stop rules and the rejections and the phasing out into strength have really, really helped. And actually have had a pretty good year this year. I'm very grateful and happy to say that, but my swing trades have not had a ton of them, but the ones I have had have been really good, and it's been a vicious market. So you really have to have some rules in place so that you're not always wondering what to do. And so I love having rules. It makes trading a lot easier and a lot more holistic. So, okay. So now what I'd like to do is, first of all, actually, I'd like to read a poem from my good friend Frank. And please support Frank. You can support him over on Twitter at FrancoD. He is a journalist, he's a musician, he's a stock trader, he's a really nice guy, and he has just this God-given gift to be able to write poems every single day about the market and what's happening in the market. So when I used to have the live stream, he would come into the live stream and post every single day. I mean, what a talent to be able to write these. But let's see what, I want to share this one, and let's see what Frank's poem has to say today. Today's market poem. There is no knight in shining armor to rescue a trader off course. Markets can crush with their powerful force. Nothing comes from nothing. There's always a source. Discipline and conviction are a trader's true line of support. Isn't that nice? There is no knight in shining armor to rescue a trader off course. That's true. It is all up to you. Markets can crush with their power and force. Boy, is that true. You know, I used to be a lifeguard at the beach in my 20s. And some days, the ocean was just so nice and so calm. And other days, boy, it is just brutal. And that's essentially what the market is. Sometimes the market seems really easy to make money. It's just all nice. It's not volatile. It's just moving up. That's the sunny day at the beach. And then other times, the market is just brutal, like the ocean, and waves crashing, and very, very dangerous. And that's pretty much where we are lately. And so yes, markets can crush with their powerful force. Nothing comes from nothing. There's always a source. It's true. Discipline and conviction are a trader's true line of support. You have to have it, everyone. You have to have the discipline. You have to have the conviction in the trading. You have to have a trading plan. You have to follow it. But those are the only things that are going to keep you safe. Having discipline, having a trading process, and conviction in it. So, love this poem. Please follow Frank. Do yourself a favor. Read his poems every day. And he's at FrancoD over on Twitter. Okay. So, trader psychology. Always my favorite time was talking about trading psychology when I had the live stream on YouTube for many years. But I did read this. This is from Mark Minervini, of course, very famous trader, very famous author, very famous educator, very successful. I think he won the trading championship. Really look up to Mark Minervini. You can follow Mark over on Twitter at Mark Minervini. Please do yourself a favor. When he posts something, I always read it. I always internalize it. But let's see what Mark has to say here. Why do the majority of new traders fail to produce superior performance and quit? Because they are attracted to the idea of being a trader, the money, the glamour, and the excitement instead of the discipline, the process, the sacrifice, the commitment, and the love of the craft. And, I was discussing this with someone the other day, and they're like, oh, you're a trader. Oh, man, that must be great. What do you just like work from home and like hang out in your pajamas and it's easy to make money? And, they think I have this particular lifestyle because I'm a professional trader. I had that kind of pregnant pause moment where I was like, do I want to get into this? Do I want to set him straight, or do I just want to go, oh yeah, it's great. What do you think I did? Yes, I did. I was like, listen, trading is not easy. There is this perception about trading that you wake up, you just waltz over to the computer in your pajamas and your slippers, have a cup of coffee, hit a couple buttons, and make a ton of money. And then, you get your fancy clothes on, you grab your Lambo in the garage, and you drive out and have lunch with your buddies. It is so opposite of that. And this is what Mark's saying. Why do the majority of new traders fail to produce superior performance and quit? Because they are attracted to the idea of being a trader, the money, the glamour, the excitement, instead of being interested in the discipline, the process, the sacrifice, the commitment, and the love of the craft. And so I told this person, I was like, listen, trading, for one, is not easy. And it's not just getting up and having a strategy. It is it encompasses your entire life. I think about trading almost 24 hours a day, and except for when I'm sleeping. And, my nutrition is very important to me. My walks up in the mountains after the trading day are very important to me so that I can process what I did during the day. How did I trade? What did I do right? What did I do wrong? I debrief my trading day in my head on my walk. I do meditation at nighttime as far as my trading, as far as, visualizing success, visualizing the proper trade setups, visualizing my discipline. And, I just see these things in my head. So I'm not trying to get woo-woo on you, but my point here in reference to Mark's poem is that that is the excitement, the discipline, the process, the sacrifice, the commitment, and the love of the craft, right? Spiritually, mentally, physically, doing your research, having downtime, getting recentered, visualization. I mean, trading it can encompass your entire life. And in my opinion, you have to do all of these things, not just have a trading process. But trading process pretty easy, but following it, that's where you need those other supports. So one more time, why do the majority of new traders fail to produce superior performance and quit? Because they are attracted to the idea of being a trader, the money, the glamour, and the excitement, instead of being attracted to the discipline, the process, the sacrifice, the commitment, and the love of the craft. It's really true. Thank you, Mark Minervini. Appreciate that, sir. This was helpful for me to read, and I hope it was helpful for everyone else as well. And please follow him at Mark Minervini over on Twitter. Okay. Well, let us go through the watch list, see if there's anything that looks interesting for next week. We'll just go by one. And then what I'm going to do, if something looks decent or looks likely for next week, I will highlight it. And then at the end, we'll just revisit all the highlighted positions. So what I'm going to do, I'm just going to go through one by one here. All right, here is Apple. Well, Apple has come back into the value zone, which I do like that. I don't like to buy above value. But for Apple, most likely a bounce here at the 100-day moving average, maybe with a combination of a V1 or a V2, would be a potential entry. Of course, if Apple came down to the 200-day moving average, I, of course, would buy that. But the most likely trade on Apple for next week probably would be a 520 cross under and then back over. Currently, the 20 EMA I'm sorry, the 5 is at 171.82. The 20 is 171. So the 520 crossover is still in place, but I would be very interested in Apple next week. If it continues down, if we get the cross under, and then if it crossed back over, that would be my entry signal. And that's a great entry signal on Apple. Let me show you over here. Let's put in Apple over here on ETF replay. Oops. What's the problem here? You kidding me? Let's see. Hmm. 520 exponential, day of cross, run back test. Oh, here we go. All right, so using a 520 crossover, look at this. Just the 520 crossover on Apple would have returned 11,221. Now, buy and hold was 20,603, but you can see on the 520 crossover approach, the drawdown was much less than the buy and hold, and that's always very important to me. So you can clearly see a 520 crossover doesn't win all the time, like there's a lot of red here, but the key with crossovers is that when it does win, it wins big, and when you have a loss, it's small. So I am going to mark Apple here for next week, but first we need a 520 cross under and then a new 520 crossover. So I will mark Apple. Adobe is at 34.03 here. So next week we certainly could get an under 30, over 30 if it continues down. It's not quite there. It's 34.03, but an under 30, over 30 would get me interested in Adobe for next week. So I will mark that. Here's AGQ. Well, AGQ did just have a signal on Friday. Yesterday it had a 520 crossover, which is legitimate and does back test well. I decided not to take this one. I'm not going to mark this one, but if next week we get a close the 520 cross under and then cross back over, that would be legitimate as well. It just crossed over, looks strong, so I'm not going to mark this one. Advanced Micro Devices. Well, it didn't quite bounce at the 200 on Friday. If it had, that would have been legitimate, but I will mark AMD here. If we continue down, I would love to see it reject the 250-day moving average. Then I could key off of the 250, or alternatively, Monday if we go down, reject the 200 and then close back over, then that would be legitimate. You might say, well, look, it bounced at the 200 here. It didn't. It got close, but I want to see it touch it. I want to see it test that level. So AMD looks pretty good for next week as a potential. Amazon, I don't see anything here on Amazon. An under 30, over 30 would be interesting, but it's 47.62, so I'm not going to mark this one. ARC Innovations, 41.43. It's potential to have a higher low V2 next week, but I think I'm just going to stick with the easier setups here, and I'm going to skip ARC Innovations because it's not close to a 30 RSI. Boeing. Boy, Boeing has had a nice rally here and just not able to get above that 200-day moving average. Normally if Boeing closed above the 200-day moving average, I would get in, but the 200-day moving average is up here near the second ATR channel. It's just too high for me to take, and so next potential trade here for Boeing would be a return to value, sideways motion, V1, V2, or an under 30, over 30, but I don't really see that as likely, so I'll skip on this one. Alibaba, I don't really see anything there. Berkshire, don't see much here either. I need to have this get down to the 200-day moving average or the 30 RSI. That doesn't seem likely. Here's Bitcoin. Well, Bitcoin had a big move up here, moved up. Now it's pulled back down for Bitcoin. You know, if we were to get a 520 cross under and then back over, that might be interesting. If we got above the 200-day, that might be interesting. But again, similar with Boeing, 200-day moving average is up here at the third ATR channel. 92% of prices fail there, so I'm not going to mark Bitcoin. Anheuser-Busch, close over the 200 would be decent. Don't know if that's going to happen, so I'm going to concentrate on ones that are closer. Beyond Meat, I don't see anything here with Beyond Meat. Caterpillar, we have been moving sideways here. A close above the 200-day moving average would be a legitimate entry, or if we went under 30, over 30. We're at 40.25 right now, so this sideways motion here, you know, a good principle of trading is sideways motion leads to trends. I just don't know when, and I don't know what direction, but I know this is going to trend one way or the other. So I do kind of like the sideways motion. I will mark Caterpillar with either an under 30, over 30 if it keeps going down, or a close over the 200-day if it moves up. Cameco, if we came back down, tested the 200-day moving average, that would be interesting. So we'll mark that one. Carnival, you can see, did not like the 200-day moving average. What about if we close back above? I wouldn't buy it because it's up here at the second ATR channel. It's too far stretched. So I don't really see anything here on Carnival. DoorDash, well, an under 30, over 30 would work on DoorDash, although we do have earnings coming up, so I'm going to skip that one. Dow Jones Industrial, well, the Dow Jones did test the 250-day moving average. This would have been legitimate. Let's go over to ETF replay and back test that. DIA, turn that to simple, and that was the 250, right? Let me double check. Yeah, double check. So the Dow Jones with the rejection of the 250, let's run the back test and see. Does back test positively, not great compared to buy and hold, does have a lower drawdown than buy and hold. So next week, I mean, it's too late now because that was a legitimate entry signal right there. But next week, if we do close under the 250 and back over the 250, or close back over the 200, that would be a good entry spot, depending on your risk to reward ratio. And, you know, risk to reward is very important. Sometimes you'll have a close under the 200 and then a huge close over. Yeah, it is a close under and close back over, but I wouldn't take the trade because of risk to reward. So a lot of it is just the devil's in the details with what is my risk to reward. This would have been a good risk to reward on the Dow right here. I didn't take that trade. But next week, if we close under the 250, over the 250, or close over the 200, I would be interested there. Disney had big earnings, gapped up, pulled back down. I don't really see anything likely for Disney at this moment. DocuSign, not very close to a 30 RSI, so not interested there. Etsy did have the under 30, over 30 and bounced nicely, but I don't really see anything on Etsy. Oh, here is Meta. Well, we're to 25.73 RSI on the daily. If we were to close back above the 30, that would be legitimate on Facebook on the daily time frame. So I will mark Facebook. FCX, don't really see anything likely there. Fiverr, don't see anything likely there. Gold, boy, that gold trade off of the 200 has really moved up nicely right there. Ooh, up to 64.99 on some of the geopolitical tensions that we've had. Don't really see anything here. Pull back to the 200 would be good. Don't see that as being likely, but that would have been a great trade with that close over the 200. GNRC 39.50, not very likely. A lot of stocks are kind of in the purgatory position. Google, now this is a good one for us to look out for next week. It closed under the 200-day moving average. If it closes back over, that would be a buy for me. If it heads back down, test the 250-day moving average, that would be a buy for me. So let's back test Google just to give you an example. GOOGL off of the 200, and we'll run the back test. 528.3% to the upside. Not as good as buy and hold, but the drawdown was only 34.3 compared to 65. So yeah, these are the kind of trades on a company like Google. These are the kind of trades. So I'm very interested in watching Google next week, either a close under or rejection of the 250 if we head back down. If we head back up, a close back over the 200. So that's a good one. Goldman Sachs. Don't really see anything likely on Goldman Sachs. Home Depot, a bounce off the 200-day moving average would be good. Let's hurry and back test that. Let's put in here Home Depot off of the 200-day moving average. 299.1% compared to 908, but still profitable. So next week, if we had a bounce or a close under or a rejection of the 200-day moving average, I would certainly key off and be interested in that one, and that one is likely. IBB, already in that trade. INDA, boy, not looking good here. I don't see anything I'm interested in there. Intel, don't see anything interesting there. IWM, I already have that on the weekly, but I don't see anything there that I want to point out. Johnson & Johnson, yeah, if we got to pull back to the 200-day moving average, we're getting close. I've been watching this one for a while, telling myself, well, if it gets back to the 200, do I know it's going to bounce there? No. Is it likely? Yeah, it's fairly likely that it's going to bounce there, but the main thing is going to get me close to my line in the sand. It's going to get me as close to my end of day stop as possible. So if we came back down here, bounced to the 200, had a rejection, closed under, closed back over, that would be my entry. My end of day stop would be a close below the 200. So I've been really patient with this one, waiting for this to come back, and maybe it will pay off next week. So I will mark that one. Coffee, commodities have been doing really well. I don't see anything there. CarMax, I already have that trade. Nothing there. Coca-Cola, don't see anything likely there. Lockheed Martin, boy, the defense contractors have been very, very strong. Would have to have a pullback all the way to the 200, but I don't see that as being likely next week. Southwest Airlines, don't see anything there. I already have that on the monthly trade. Lyft, I don't see anything there either. MasterCard, pull back to the 200-day moving average might be interesting. Look, we have a 50-200 cross. That's called a golden cross. That's kind of a good long-term indication for MasterCard. But a pullback to the 200 would be an excellent risk reward on MasterCard. So I will mark that. McDonald's, I don't see anything on McDonald's. Merck, almost bought Merck on Friday with a close over the 200-day moving average. You can see it was much, much higher. It sold off with the pullback in the market. So I do like Merck for next week. With either a close back above the 200 and then using your 200 as your end of day stop, or a rejection or a close under back over the 250. So it's right there, kind of stuck in purgatory. But if it closes over the 200, I would be interested in Merck that way. Or if it goes back down, rejects and holds the 200 there. So I will mark Merck. Microsoft, well, I already got out of Microsoft, but if we again have a close back above the 200-day moving average, then I would re-enter it, just like I re-entered it over here for the same reason. So I will mark Microsoft. So there's a lot of potential on some really good stocks for next week. They just need to go higher or lower for me to get interested. Netflix, we're at 33.90. And under 30, over 30 on Netflix would be a valid entry signal. I especially like that MACD is positive, so I'll mark that one. So we have some good ones for next week. Nike, An under 30, over 30 on Nike would be legit. So I'll mark that one. NVIDIA, if we bounce to the 200-day moving average, that would be legit. We do have earnings coming up, so I don't think I'm going to mark that one. But that, I never hold through earnings, so keep that in mind. But if it does have a rejection of the 200-day moving average, it would be legitimate to take. But if I did take it, I would have to get out before earnings, and earnings are on the 16th, and so I'm just not going to mark this one. Pfizer, I don't see anything there. PKI, pull back to the 200. Don't know if it's likely, so I'll pass on this one. PLTR, I don't see anything there. When you go through these charts, if I was just going through these charts and not recording a podcast, I would go very, very quickly. Just no. There's an old saying, if the trade isn't obvious, it's obviously not a good trade. I love that saying. And so, I'm kind of talking these out a little bit here, but if I was doing this by myself, I would just simply been going down quick, because there's nothing there. PayPal. 24 RSI. I'm not going to get involved with PayPal. It's been extremely weak. The Qs, which I just got out of it, that last part at break even. Look, an under 30, over 30 on the Qs would also give you a double bottom and a bullish divergence. I don't know if it's likely that it's going to get there, but I guess it could in this crazy market. So let's mark it. Rio Tinto, pull back to the 200 would work, but that doesn't seem likely. Shopify, under 30, over 30, but does have earnings, so I'll skip there. SIVB, let's see, 626.95, 627.27. So this would have been a legitimate entry with the bounce off the 200-day moving average on SIVB on Friday. I'll skip that. Silver has been very, very strong, had a 520 crossover, which has moved up nicely, but I don't see anything likely there. Snapchat just went up so much after earnings, but now we're moving sideways. I don't really see a potential entry there. Virgin Galactic, kind of a scary stock, and under 30, over 30 would be legit, but it's not very close. The SPY, boy, look at this. A lot of good things that could happen with the SPY here. I love these levels. We could come back down, test the 250 next week if we bounce there, or we had an intraday rejection, or we had a close under, close over. I would key my trade off of the 250. You can see back here we tested the 250 1, 2, 3, 4, 5 times. So that seems to be a good level. So with the S&P 500, a close over the 200, that would be one legit entry signal. If it closed back above the 200, if it goes up, or if it heads down and goes under the 250, over the 250, I would also be interested there. So I'm interested in SPY for sure if it goes back up over the 200, or if it rejects the 250 below. So we'll mark that. Teladoc, I don't see anything there. Teradyne, nope. TLT, of course, I took that on Friday with an under 30, over 30, and a double bottom bullish divergence. Has worked out nicely so far, but I wouldn't be chasing it here if you're not already in at lower levels. Tesla, I'm already in this trade, but next week, if you got a bounce at the 200, that would be a very interesting point or place to get in. You can see I did the same thing back here on the 28th. And had a great trade. So the market has been respecting the 200-day moving average on Tesla. So if it keeps moving down, a bounce at the 200 or a bounce at the 250 or rejection of the 200 or rejection of the 250 would be an excellent place. So I'm certainly going to mark that one. Twitter, no, 43 RSI, so not very interested in Twitter. Unity Software, don't really see anything here. United Airlines, I don't see anything there. UNG has held the 250-day moving average. Although I recall I backtested this, it does not backtest well, so I am just going to pass on that. UNH, United Healthcare Group, don't see anything likely for next week. USO, boy, US oil has really just been moving upward. A 74.75 RSI. Wow. But no potential there, likely. The dollar, don't see any potential there. The VIX, which has been a big mover upper, I don't see anything there. Verizon, a close above the 200-day moving average would be legitimate, and it's in the value zone, so we'll mark that one. And again, I will go through all the ones I marked just so we can recap. Walgreens, close back above the 200-day moving average would be interesting. It would be coming from a higher low, so I will mark that. Walmart, under 30, over 30 would be interesting, but it does have earnings coming up, so I am going to stay. I'm always a little concerned when earnings are coming up, so I'm not going to get into that. XLE Energy has gone way up, way too high for me. XLF, if we had a pull back to the 200-day, that would be a great place. It respected the 200 last time, but I'm not going to mark that. Doesn't look very likely. XLE, ooh, interesting. You know, let me see if I can back test XLRE, which is real estate. XLRE, based upon the 200, it does back test positively 15.3%, and let's back test it off of the 250 as well. Yeah, they both back test positively, but not great. What I would really like to see here on real estate is for us to come down, test the previous low that bounced right at the 250. You notice that, just like we bounced here. But then if we got back down to this previous low, we'd have a beautiful double bottom bullish divergence. So I would love to see this come back down, test this low, perhaps go under 30, over 30. That would be the sweet spot for me. So I will mark that. Utilities, did bounce at the 200-day moving average here. I'm going to mark utilities because I see the same thing here. If we come back down, test this low over here on the 26th, we'll have a double bottom with the bullish divergence, and the entry trigger could be the 250. So that makes sense. So I'll mark that one. Healthcare, close back over the 200 would be legitimate. We've closed under, but if we could close back over, that would be decent. Exxon, too high, and Zoom, no. All right, so let's recap for next week the ones that I'm looking at, the ones that I'm interested in, and here we go. And by the way, if all of these trigger next week, I would not take them all. I like to take one trade per day. I like to take the best trade of the day, so keep that in mind. I wouldn't take them all. I would take the best one of the day. Apple, I need on Apple close the 5 to cross under the 20 and then close back over. It's still above, but it does kind of give you something color by numbers, and for me to look at. If next week, if we continue down, then I would look for a close back, the 5 closing back over the 20. I don't know if it's going to happen, but on a company like Apple, I want to point this out. So I'm looking for a 520 cross under and then back over. That would be my entry signal on Apple. Adobe, we're at 3403. Close under, close back over the 30 RSI, or an intraday rejection of the 30 is what I'd be looking for next week on Adobe. Advanced Micro Devices, if we could get an intraday rejection or a bounce or a close under, close over the 200 or the 250 next week on AMD, I would certainly buy it. That's what I'd be looking for. Caterpillar, close back over the 200-day moving average is what I would be looking for. That would be a legitimate entry for me. Not there yet, have to wait. Cameco, if we came back down, bounce at the 200-day moving average next week, that's what I would be looking for. The Dow, if we were to reject the 250-day moving average again, that would be one legitimate entry place for me next week, or alternatively, if we close over the 200. So another retest of the 250 or a close back over the 200. Facebook, 2573. If we closed above the 30, that would be an interesting spot for me to look for a long entry. Google, I really like here with either a close over the 200-day moving average if it moves up, or if it goes back down and holds the 250. Ideally, a rejection of the 250 would be an excellent spot for Google next week. Home Depot, a bounce or rejection at the 200 would be a wonderful place, or at the 250. It's not there yet, but something to look for next week. Johnson & Johnson, we've had this pullback. If we could pull back, reject the 250, that would be an interesting spot. MasterCard, same. If we continue down, bounce at the 200, that would be an interesting spot. Merck, if we close above the 200, I'd buy it. If we head back down and reject the 250, I would also buy it. Microsoft, just looking for another close above the 200-day moving average, as long as it's not too far extended. If Monday we go way up and we're way up here, then I wouldn't buy it. It would have to barely close above the 200, but if we move up, a close above the 200. If we head back down, love to buy Microsoft back down here at the 250. Netflix is at 33.90, so if we had an under 30, over 30, if it heads back down and then bounces the 30, that's where I'd be interested. Nike, same. It's at 31.87. If we have an under 30, over 30, that's where I would be interested. The Qs, if we could come back down, double test this bottom, have an under 30, over 30, that would be excellent. Or conversely, if we had a 520 crossover, if it moved up and had a 520 crossover, be interested in there. But I'm really trying to buy the deep dip buy on the Qs. SPY, really like this one. If it heads up over the 200, that would be my entry spot. If it heads down, rejects the 250, that would also be an alternative entry spot. Tesla, already in the trade, but if it bounces at the 200, just like it did the first time I bought it over here, that would be interesting. Verizon, close over the 200. Walgreens, close over the 200. Real estate, this was legitimate on Friday. I did not see that, but another close under the 200, over the 200, under the 250, over the 250 would be an excellent spot, or alternatively a close over the 200. But I'd really like to see it come back down, double test this low with a double bottom bullish divergence, have an under 30, over 30. That would be prime. XLU, if we come back down, test the 250-day moving average and give us a double bottom bullish divergence. So I'd be very interested in XLU at about 66.21. And then healthcare, close back over the 200 would be interesting, or alternatively, if we move back down and have a test of the 250. So that's the list that I'm looking at next week. So yeah, it was a crazy week. I hope you're going to have a good weekend. If you have any questions on this, just leave your questions and comments below, and I'll do my very best to get to them. I just want to remind everybody of a couple things. First, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm a great teacher. I've taught many, many students from all around the world, and I've watched them develop into really good traders. I teach a great course. The course is 15 hours total. You and I, 15 hours. Each session is 3 hours long. And then there are 5 sessions, and that's where you get the 15 hours of total. And I think the very best way to learn anything, whether it's tennis or guitar or whatever, trading, is to have a coach, have a one-on-one mentor that really teach you. And I've been trading for 25 years. Everything I teach in the course is what I use every day. I teach you the 5 different trading approaches that I use. I teach you step by step, so you'll always know what to do. It's a great course. It will make you a better trader. I promise you. It does cost $1,750, which I know is a lot of money, but it's an investment in yourself, and you are going to learn a skill. So if you're interested in doing this with me, I promise I will do my very best. I will teach you everything I know. It's very important that my students succeed, and so many of my students have succeeded, and I was happy to be a part of that. So if you're interested in this and you want to get the ball rolling, just send me an email. The email is in the link of this YouTube description. Just send me an email. Say, Greg, I'm potentially interested in taking your course. I'll say, great. Thanks for reaching out. Let's do a Skype call. The Skype call is free. And what's the reason for the Skype call? I just want to get to know you better. I want to learn more about your trading, your challenges, your goals. And it's a great time for you to ask me questions about the course. And the Skype call is not a sales call. I promise you, everybody, when we're done with the call, I'll just say, hey, think about it as long as you want. And, if it makes sense to you in the future, just get back with me and we'll get it scheduled. But I know you're going to be happy that you took the course, and I love to teach, and you're going to be a better trader. So, if you'd like to do that free Skype call with me, just send me an email and we'll get it set up. Secondly, I do have a great online video course available at udemy.com. It's called the Deep Dip by Stock Trading Strategy. This has been a very successful course. People from all over the world have really loved it. They've given me such good reviews, such good feedback. And in that course, I teach you step by step exactly how to trade the Deep Dip by Stock Trading Strategy. As a matter of fact, whenever I do one-on-one courses, I always like to have my students watch that course before we do the one-on-one course because it's so valuable. It has such good content. There are 9.5 hours of video in that course. There are 15 study guides. There are 26 videos, and it will teach you step by step and give you such a good idea of position sizing, end of day stops, emergency stops, profit targets, overhead resistance level. And the best thing about it is it only costs like $12 or $15 on Udemy. Yep, you heard me right. It's only 12 or 15 bucks, and I'll tell you what, that thing is worth 100 times that price because it is such a great course. And in this podcast, I go through pretty quick what I'm doing, and you may go, I don't quite V1s, V2s, right? But in my one-on-one courses, I teach you all that. And then in this online course, so much of that as well. So if you're interested, the link to that Deep Dip by Stock Trading Strategy is in the link of this description here in this YouTube video. Do yourself a favor, spend the 12 or 15 bucks, go and watch it, internalize it. It's going to make you a better trader. And then last but not least, if you like today's podcast, I would just appreciate it if you could hit the thumbs up button. It helps to build the channel, helps to keep the channel around, lets YouTube know there's some valuable content. And I hope this new format is helping to look at, my trades and get my thinking of why I got in them, how I'm going to manage them. I do miss doing the live stream where we have the interactions, but hopefully, with my new trading position, not being able to do that, I hope this is helping you, and then also hope it is helping you look at some potential trades for the next week. So I think that's a wrap for today. I hope you have a really good weekend. Get out, get some air, maybe some exercise, study your charts, maybe do some good reading, but be good, be safe, drive safe. If you can, try to go out and do something nice for someone today. It would make the world a better place. Go out and try to do something nice for an animal today. They would appreciate it as well. And maybe one day somebody will be there for you if you're having a hard day as well. So I'm a big believer in just trying to do positive things for people. And it always comes back to me, and I think it will come back to you as well. Next week, we have Valentine's coming up, so that should be interesting. That should be fun. So have a good rest of your weekend. If you have any questions, you just write them in the comment there of this channel, and I'll do my best to answer them. But if you could hit the thumbs up button before you head out, I would really appreciate that. So enjoy your weekend. We shall see what this crazy market brings for us next week. But remember, you always have to have a plan with your trading. You don't know what the market's going to do, but you have to know what you are going to do, whether it's to the upside, whether it's to the downside, whether you're taking profits, taking losses. Make sure you have a complete trading plan in place. And if you don't, if you take the one-on-one courses with me, I promise you will have a complete trading plan. And if you watch the online course, the Deep Dip by Stock Trading Strategy, you will have a full plan there. But get yourself a plan, whether it's from me or someone else, but get yourself a plan. All right, so I think that's it. Appreciate you being here. On the way out, I have to run the U.S. legal disclaimer again. So take care, everyone. Hope you have a good week, and we'll talk to you soon. And be careful in the markets next week. Take care, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.